A very good afternoon and welcome to the program. Thank you for tuning in. This is the Monday edition of Market View. My name is Lungelele Makakula. The Central Bank of Eswatini Governor Dr. Phil Mnisi last Thursday delivered his annual monetary policy statement. The Governor, Dr. Phil Mnisi, said the central bank will continue to monitor any developments in its pursuit for price and financial stability. The Governor said he noted that even though inflation moderated at a faster rate than expected last year, risks persisted and therefore monetary authorities kept interest rates steady at restrictive levels. In the statement, the governor also disclosed the private sector credit increased in the year 2023 to 15% compared to the 11.1% in 2022. We will connect with Sanelis Biya for an in-depth discussion. We want to know what is the implication of private sector credit on economic growth in Eswatini and the relationship between private sector credit and the GDP. Will join us again for today's financial markets. Do stay tuned. For now, let's go to business news. Welcome back. You're still watching the Monday edition of Market View. Thank you for joining us this afternoon. Let's go to business news. And Constitutional Affairs Honorable Prince Milane has encouraged agencies which fight against money laundering and financing of terrorism to identify gaps that hinder the kingdom in its quest to eliminate money laundering and recovery of all illicit assets, and also come up with strategies that can be adopted by the country to strengthen the fight against money laundering and the financing of terrorism. The minister was addressing a meeting on interagency coordinating framework at the Hilton Garden Hotel in Babane. Eswatini got support from the United Nations Office on Drugs and Crime to formulate this framework.
This framework is a much-needed capacitation tool to enable Eswatini to fulfill its international obligations in combating money laundering and terrorist financing. When the delegation from the Eastern and Southern Africa Anti-Money Laundering Group, Assam League, came to Eswatini to perform an evaluation of the country's systems and mechanisms in place to fight money laundering activities and terrorist financing. It picked up on the lack of coordination and cooperation in identifying and investigating terrorist financing cases, as well as the risk of terrorist financing among law enforcement authorities, other competent authorities, and the private sector. On the next evaluation by Assam League in the year 2023, we received a positive tick on the aspect of having a tool on interagency coordination. However, on the downside was the lack of the implementation of the content of the framework. Today, we are gathered here again through the support by ARINSA to forge a way forward on the identified new gap.
As more assets are recovered or forfeited to the state, more assets are made available to be re-injected into the national budget for the benefit of local communities. In this regard, UNODC would like to encourage the continuation of the efforts by the government of Eswatini to recover and manage the proceeds of crime. This interagency model, adopted by Eswatini, whereby institutions make efforts to jointly participate in this process, will ultimately benefit the members of society and ensure the availability of extra budgetary funding for development.
The lack of laws governing digital currencies has slowed their expansion in the United States. Cryptocurrency investors are encouraged that U.S. House of Representatives is considering a new legal framework for electronic money.
Up until cyber attacks in recent years caused many investors to lose billions of dollars. Now, cryptocurrency experts say digital currency is ready for a rebound, thanks in part to congressional action to regulate digital asset markets.
We hear a lot about the lack of legal clarity for the treatment of digital assets, which was the impetus for this legislation.
North Carolina Representative Patrick McHenry says the Financial Innovation and Technology for the 21st Century Act, or FIT 21, will ensure the United States remains a global leader in technological innovation and adoption.
At its core, FIT 21 applies time-tested consumer protections to ensure that 20% of Americans who engage in the digital asset ecosystem can do so safely, and so more Americans can engage as well.
Matthew Graham is managing partner of the emerging technologies venture capital firm Rise Labs. At a recent crypto conference in Texas, he said the United States is trailing the world in digital currency and should not presume that the standard for most electronic money will continue to be U.S. dollars or USD.
If you really view USD hegemony as an overwhelming important national interest, then that's a very strong reason to double down on incentivizing crypto, because if there's anything that's good for the future of USD hegemony, it's an alternative or future financial asset class that is overwhelmingly USD.
In this U.S. presidential campaign, there are digital currencies named for but unaffiliated with President Joe Biden and the presumptive Republican nominee, Donald Trump. Third-party candidate Robert Kennedy Jr. was at the Texas Crypto Conference, where supporter and American Crypto Academy CEO Jahan Jamali launched the digital coin Bobby.
What we've seen over the last year or so are what's called meme coins sort of translate out of crypto into movement type of coins, especially now that it's a political election year here in the United States.
If senators do not take up the House digital currency legislation in this election year, it may be up to the next president to shape cryptocurrency's future in the United States.
It's 8 minutes after 2. We go for an ad break. When we resume, we talk to Sanele Sibia, our in-house economist, to discuss the private sector credit, which has increased according to the monetary policy statement.
Sabatani ukuthi njengalokhu sivile sive sikhulume.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m, where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back. Thank you for staying with us. This is the Monday edition of Market View. My name is Lungelele Makakula. Last Thursday, the governor of the Central Bank of Eswatini, Dr. Phil Mnisi, delivered his annual monetary policy statement. And one of the key achievements that he disclosed was that the private sector credit increased to 15.0% in 2023 compared to 2022, which was 11.11%. Our in-house economist, Mr. Sibia, joins me now to discuss this. Mr. Sibia, very good afternoon, and thank you for joining us this afternoon. We are talking about the private sector credit. Dr. Phil Mnisi did say it has shown growth over the years, particularly last year. What are the benefits or advantages for financial institutions to invest in private sector credit?
Thank you, Linda. Good afternoon to the listener, to the viewer. So the issue of private sector credit, Lulu, just basically shows that we are somehow seeing some growth post-COVID, and that's why we are seeing those numbers jump up by that magnitude. So what it means is, there is that renewed interest in investing in the country. So that's what private sector credit usually indicates. It indicates signs of growth, and we really urge, businesses to get credit to expand their operations. And if the local credit institutions are now extending this credit, so that shows signs of confidence in the economy and signs of growth in the economy. Yet we understand that right now we are under what we call a very strict lending market, given the interest rate hikes that we are seeing there about. But still, it's quite promising to see that there is that marginal increase in the current year. So what we would urge local credit institutions to do is to actually have faith in the local markets. It seems we have a stable market, and it seems we have gotten our fundamentals back into place, and the economy is showing signs of growth in the short to medium term. So there is that scope for investment in credit in the local economy. Thank you.
Mrs. Bia, businesses, it is reported in the statement that businesses registered a growth of 15%, as I've just mentioned, in 2023 compared to the 11% in 2022. Was this influenced by the economic recovery in most businesses participating, particularly post-COVID?
Yes, Lou, that was the major contributing factor, moving from a low base during COVID to a high base post-COVID, where economic activity was somehow being restored into action. So those are one of the benefits that we are seeing, one of the driving factors that we saw driving credit post-COVID, and also the fact that, 2023 post-COVID was a relatively low interest rate dynamic. So the interest rates had not started climbing by that much. It only started happening towards the latter part of the year. So those were the factors that were contributing. We were in what we call a soft lending position, but now the lending position has become somewhat a bit stricter. So those are the factors that were interplaying to actually yield this much increase in credit extended to the private sector. And also the fact that we saw the government, fielding a very robust post-COVID economic recovery strategy with about, I think, close to 5 billion that was going to be planted into the economy. So part of that money is actually mobilized through credit, Lulu. So those are the factors that we're playing together to really just beef up domestic credit to the private sector.
Yeah. So what then is the implication of private sector credit on economic growth in the Kingdom of Eswatini?
So when we talk of credit, Lulu, what we really look out for is the basics in economics, or the basics of finance, or the basics of business basically is never use your own money. So most of the business people that have money out there, they never use their own money. So when we see credit to the private sector extending and growing in magnitudes the way it is growing, it shows signs of a growing economy. So if credit is also constricted, that means there isn't much money flowing for businesses to expand their production capabilities and their production frontiers. So that is why we usually urge businesses to cultivate that environment that makes it easier for growth. Credit is usually used to finance growth, Lulu, and to finance operations. So if there isn't credit flowing out, that means there is not much growth and there's not much operations happening within businesses. So that usually is a sign of a contracting economy. So those are the things that we always try to balance up. So once we start seeing credit to the private sector declining, that means we are in somewhat of a contraction in terms of economic activity, which is not good for the economy in terms of employment and all the other macroeconomic variables that one needs to balance up to ensure that we have a growing economy.
Yeah, so one would say the private sector credit and the GDP are somewhat similar. What is really the relationship between the two, the private sector credit and the GDP?
So we know when you are studying the business cycle and you're studying the way in terms, how what is going to drive GDP and what usually happens along those lines. Usually we say, private credit to the private sector lags behind, changes in GDP. That means when we start seeing signs of a growing economy, then you are going to start seeing that credit sector, private credit sector to credit to the private sector being expanded as well. So we usually see that one-to-one relationship. When we are seeing credit to the private sector on an increase, that's usually a sign of an increasing economy. So we usually look at credit extended to the private sector as one of those indicators that we follow when we are looking in terms of where the economy is growing. And then at the same time, once we start seeing private credit to the private sector on a decline, that's a sign of a contraction in economic activity. So there usually is that positive relationship between GDP and credit extending to the private sector, purely because those are the indicators that one follows. It usually means that people are building more plants. They are expanding their businesses, and by default, we do expect employment to also increase once we did start seeing those dynamics shifting in that direction, Lulu.
So for economic growth to take place, there should be support from the financial sector, I suppose. So does the growth in private sector credit mean businesses have full access to the finance?
It means that, basically, in a nutshell, it means that businesses now have access to finance. And if you look at that story, it also tallies with our GDP figures for 2023. You remember 2023 GDP figures stood at around 4-point-something%. And then you juxtapose that together with the credit to the private sector. That shows you that there is that causal relationship between the two macroeconomic variables. So when we are seeing credit being extended by the financial sector to the private sector, that means we are in a way creating a stable and thriving economy, and it's one of the things that we usually look out for. And usually the bankers are the first ones to start showing direction of how they think the economy is going to go. So it's one of the things we always are on the lookout for. And I think it's one of the reasons the central bank always publishes those statistics, because they do show where the economy is going to go. So the fact that we are seeing that jump in credit extended to the private sector is actually significant, and also showed in the GDP figures for the previous year.
Yeah, just one last question, Mr. Sibia, before I let you go. From a view of an economist, your perspective, I'm sure you've gone through the monetary policy, Dr. Phil's monetary policy statement. What is your view, particularly on benefits for the consumers?
So when one analyzes and looks into the monetary policy statement, we can see that we've had a very robust monetary policy for the past 2 to 3 years. I mean, since COVID, we've always had a very robust and a strong monetary policy framework and monetary policy stance. But what one then really just tries to cushion against is the poor fact that, when you look at the dynamics of interest rates, which have actually put us in a very hard lending environment. And so those are the ones that one would say, if I'm thinking from the standpoint of a consumer, that's one of the things that consumers are hoping will soon start going down. And I do believe that we are actually in a period where we should actually start seeing the interest rates go down. But in terms of managing the inflation dynamics, that I must give to the Central Bank of Eswatini, working together with at the Ministry of Finance and all other relevant ministries. We've had, a situation where we've been able to manage inflation as a country, compared to when you are looking at other countries who would be talking of double-digit inflation. And actually, we are doing better in the region comparatively to our comparator countries. We are far better than quite a number of countries in the SADC region, and also in terms of the management of public debt. And also when we're looking into our reserves, they are actually in a very good, somewhat of a good stance. So those are the things that make it easy, for a stable macroeconomic environment in Eswatini, and we've seen that the central bank has really ensured that we maintain a very plausible and a very prudent monetary policy stance.
All right, thanks so much, Mr. Sbia. Mr. Sbia joins us again after the break to give us today's financial markets. It's 20 minutes after 2. Stay with us.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Sabatandi ukuthi njengalokhu sifile sive sikhulume.
Welcome back. You're still watching Market View, the Monday edition. Thank you for staying with us. It's a Monday afternoon. We want to see how the markets are performing. We are now joined by Sanel Sbia. He comes back. He joins me again. Mr. Sbia, good afternoon once again. We want you to give us an update, an overview of today's financial markets. Currencies, the US dollar are trading against the lilangeni. There's a percentage change, which is 0.62%.
Thank you, Lulu. And maybe let's start with the currencies. So like you rightly put it, we are seeing the lilangeni actually gaining a bit of strength, not even a bit of strength, it's actually gained a lot of strength, coming closer to the 18 mark, we're at 18.32. So what that signals is the fact that the lilangeni has gained strength against all major currencies. So what we are seeing driving those is purely, the maturity of the way in which South Africa has handled the entire transition. So what we are seeing there is really a maturing democracy, and markets are taking that in stride, and that gives a bit of comfort, compared to quite a number of African countries where post such elections, there's usually fights and whatnot, but we're seeing the maturity with which that has actually been handled in South Africa. So we've seen that actually resulting in that gain against the dollar and also against the Japanese yen. But particularly around the euro story, Lulu, what one then has to also add to the fact that in as much as we are seeing the impacts of the politics playing into the markets, but what we are also seeing again in Europe is there is those politics playing into the markets, weakening the euro even further when you look at what is happening within the voting in Europe and actually the snap election that is about to take place in France. So it's all of those dynamics putting us at a very good stance as a country, and that means those are good news for those who are actually exporting commodities in those internationally denominated currencies. Thank you.
Moving on to commodities, I see that gold is still doing quite well even this Monday afternoon. It's trading at $2.3 and also Brent crude oil points up by 0.11%. Take us through these figures, Mr. Spear.
So the story of Brent crude, Lulu, is that of demand. So when we, just the previous days, we saw Brent crude on the rise from the 70 region, now coming way above the 80 region. That was purely based on the issue of stronger demand coming out from, the global north that's going into the summer right now. But, the news coming out of China today, when they closed the Monday session of trading in China, showed that when you look at factory level data in China, shows that there's been that decline in terms of demand, and that is what is playing into those numbers. That weakening demand coming through from China, which is one of the major consumers of oil. That's why we are seeing markets pricing that into the into their thinking, while as well we are still waiting for clearer news to come out from the US regarding what the monetary policy stance is. So that's why we are seeing oil just climbing back down a bit. And then in terms of gold, we are seeing gold still comfortably on that 2.3 region, but there's still that that uncertainty again that is dependent and contingent on the monetary policy stance that's going to come out of the US markets. As we know, what is going to be driving, what drives markets mostly this year has actually been the issue of the interest rates. We are talking of a strict lending position, and that's what markets just need, just need that bit of relaxation so that we can see growth coming through from the real sector. So markets are basically moving to that, and gold is still sitting strongly there, but yeah, we've seen it losing a bit, instead of approaching that 4,000 mark, but just awaiting those news that are going to come out this week.
Yeah, and what is the situation in international markets, looking at the US markets, European and Asian markets?
All right, thank you, Lulu. So when we go to the US, what we are seeing there is, the mood, it wasn't so good when the markets closed last week on Friday. And when you're looking at the futures, the Nasdaq futures, you can see they climbed up a bit this morning. So that's purely because, the economy in the US market is still awaiting the clear comment to come out from the Federal Reserve Bank in terms of the monetary policy stance. And the markets just need clear direction on how much we are expecting the interest rates to decline this year, or if they are actually going to start falling this year. So markets are still trying to price that in, and it hasn't come out clearer in the previous addresses by the Federal Reserve Bank. And we are waiting that comment to come in later today when now opening bells ring in the US. And also at the same time, we are waiting to see the retail data that's going to come out, and the purchasing managers indexes as well, to see how much economic activity is actually moving in the US. But what is interesting to note about the numbers, Lulu, is the fact that yes, they are still in that positive region. Even though we are seeing that gain, they are still in higher regions than they were, let's say, 2 or 3 months ago. So that's still positive signs that the economy is going to be strong, but we are just awaiting to get clearer direction in terms of that monetary policy statement. And then again, coming into Europe, what we are seeing there, what we are seeing in Europe is there is those mixed movements, while we saw France coming in and out of the negative, but what we note is France has actually been way below the 8,000 mark, mostly because it's being pushed by the election story, and there is an issue, uncertainty around a bailout of French bonds. But we've seen the European Central Bank coming out to say that that's not going to happen anytime soon. And as of the past 15 minutes, if you look at the numbers right now, we are seeing France on the rebound again. And then coming into London, what we are seeing there is the issue that, remember, not so many days ago, we were celebrating that the FTSE has surpassed the 8,000 mark, but that was purely because the pound was not performing very well in terms of international markets, so they were attracting a lot of capital to come in. But right now we are seeing the pound is strengthening again, and it's losing momentum. And also we are waiting the Bank of England to give us information and their monetary policy update. And we know markets are weighing whether they are going to start cutting. Are they going to follow Europe, or they're going to wait for the US? So that's what we are seeing happening in Europe overall. And within Germany, we're seeing that a bit of stability in terms of the manufacturing data and the manufacturing numbers coming out, and we're seeing Germany holding steady there. And then coming into Asia, what we're seeing in Asia is a mixed reaction to what the Bank of Japan is actually going to do. We're seeing the Nikkei losing quite a lot of ground, as of closing today. That's purely because there is this move in Japan from that soft monetary policy stance from that negative interest rate territory to a positive interest rate territory. And coming into China, what we are seeing there is the numbers came out showing a weaker demand for manufacturers, and that's what the markets are pricing in right now. And also when you looked at the property efforts are being made to try and shore up the property sector in China are seemingly not working, and markets are now pricing that in, worrying about whether the property bubble is going to explode or not. And then in South Africa, what we're seeing is we are seeing the all-share index, just bouncing back post the election of a president and the stability in the market. So we are seeing that movement upwards in South Africa, and in the local markets, we are still at the very same 469.72. Thank you.
Thank you so much, Mr. Spear, for that analysis for today's financial markets. That was Mr. Spear, our in-house economist, giving us the latest on our financial markets this afternoon. Thank you for joining us for this Monday edition of Market View. Join us again tomorrow at exactly 2 p.m. Have a lovely day.